Hello, this is Jody Samuels from FX Trader's Edge with the global market analysis for May 6, 2016. Please read the disclaimer to yourselves, and thank you. This chart shows the market correlations between the euro, which is the candlestick price chart, oil in magenta, S&P in blue, and gold in green. And we can see how well these markets have correlated since mid-February when the Fed decided to leave rates on hold and has been teasing the market ever since with these monthly FOMC meetings. So everything has been in an uptrend. The euro has traded higher, the S&P in blue has traded higher, oil has traded higher off of the lows, as has gold. So will non-farm payroll change this trend? Let's have a look at the individual markets to see what we think for the week ahead. And before we do that, let's just make a note that non-farm payrolls did come out today, and it was 160,000 jobs that were created versus the expected 203,000, but average hourly earnings climbed 0.3% higher from March, giving the Fed some much needed validation for wage increases. Now, their rate decisions are based on inflation, and they're also based on growth and employment. So the fact that the number of 160,000 jobs was lower than expected, it could be that the inflation number balances that out. But that's really not what the markets have told us post non-farm payroll. Let's have a look. Let's start looking at the Euro USD. Traders tried to extend the rally in the euro upwards towards 116 and above towards 116, the high being 116.17 earlier in the week. It failed there, and prices continued to drop for the balance of the week. Even when non-farm payrolls came out and the non-farm payrolls were weaker than expected, the market couldn't take the euro past 114.80 when it quickly reversed its gains and traded lower to close at 114.10 on the day, and the low is 113.86. Next week, we should continue to see the euro trade lower, provided we respect that 114.80 level and then the 116.17 level. Of course, we have to take out the lows of 113.86. Let's move on to oil. Oil was range bound this week, trading to a high of 46.14 and a low of 43.22, and then closing pretty strongly at 44.53. After non-farm payrolls, oil initially tested lower but quickly reversed its losses, similar to the Euro USD reversing its gains. Next week, expect oil to remain range bound unless the market breaches the highs of 46.14 or the lows of 43.22. Gold traded down all week after trading to a high of 1303.83 over here, and it traded off to a low of 1268.96. Prior to non-farm payrolls, gold had been trading off the lows. This was on Thursday, and then just as the non-farm payroll was released, it initially traded lower. You can see the spike low, and then traded up for the remainder of the day, but closing down from its daily highs. So next week, on an Elliott wave perspective, we are bullish gold, but would like to see the highs of 1303.83 taken out for further gains. And finally, on the S&P 500 sold off during the week and staged a nice recovery after non-farm payroll, but still remaining within this downtrend channel, if you were to imagine a downtrend channel. From an Elliott wave perspective, the S&P 500 has retraced this whole move has retraced a shallow 23.6% of the prior swing move higher. So keep a watch out for the 38.2% level of 1995.7 should the lows of 2036.2 be taken out. Thank you for listening to the Global Market Analysis for May 6, 2016. If you enjoyed this video, please like and subscribe. See you next week.